Yo, what's the dealio? What is the dealio, y'all? Hey, look, check this out, man. So, in today's video, we're going to be talking about trading rules and confluences. Okay? So, today in the market, number one, if you made money today with us or anything that we talked about yesterday, then be sure to drop it in the comments. All right? If you made money, drop it in the comments. Next, be sure to like this video. All right. We come in every single day with high quality, valuable information that could change your life. All right. So, trading rules and confluences. Now, today was a very interesting day in the market. I saw a lot of traps and I did not partake. I did not take a trade today. Okay. I'm in a couple swings. I entered into a swing trade, but some days is great days to trade. Some days is great days to enter into swing trades, right? And some days is just good days to sit it out. All right. So what I want to talk about is when do you enter into trades and what's the supporting evidence? All right, and also trading rules. You gotta have trading rules. You have to have trading rules, okay? So I wrote down some of my trading rules because I do a lot of stuff in my head and I have a journal, but I do a lot of things in my head that I do like subconsciously, okay? So I want to go over some of my trading rules and helps to help you out with your trading rules, right? And I'm gonna talk about these. So first thing, right? Know your entry. That's number one rule. Know your entry. Don't get in the middle of levels. All right. If support is here and resistance is here, don't get in the middle of levels. All right. Don't chase entries. That's also like don't get in the middle of levels. Don't chase it. If you see a stock is on a second green candle and it's blasting off, don't chase it because that motherfucker gonna put you in a blender and then you're gonna become a smoothie. All right. So don't chase entries. The next one, enter at new candles. Okay? Enter at new candles. If I'm trading and I'm trading on the 15-minute time frame, I shall not get in a trade when it is at 7 minutes left in the 15-minute time frame because it could be a wick, all right? That's a second way you become a smoothie, all right? Next rule, wait for pullbacks. This goes back to not chasing, all right? And when I say wait for pullbacks, I'm not talking about a tiny little small red count. No, I'm talking about wait for the pullback and then for it to prove itself to go to the upside, okay? That's another way you become a smoothie, all right? The next rule, don't risk more than I need to, right? So you want to know what kind of move you're looking for. Am I looking to get 10%? Am I looking to get 30% on this trade, right? Whatever the case may be, you want to make sure you're not risking too much because when you start risking too much, you start being anxious and nervous about the actual play, all right? So if you want to start risking too much than you need to, you will become a smoothie, all right? Next one is going to be wait the first 15 minutes of the market. All right. When I was first trading, I first started, I would get in 5 minutes in the market. I didn't even understand the concept of waiting 15 minutes. And then I became a smoothie, right? I got put in a blender and I became a smoothie. Okay. I don't like that. So I started to wait 15 minutes and my profitability increased exponentially. When you could wait and see where the stock is going, that's when you start making real money in stock trading. All right. The next one, don't try and predict. This goes back to your entries, knowing your levels, all right? Do not try to predict. Oh, the stock is going to go down because I heard some news. And then it goes down by $2 and then it reverse on your ass and it go up, all right? That is how you get put in a blender and you become a what? A smoothie, all right? So be sure that you stop trying to predict. Next thing, focus on trading momentum. That's a rule for me, all right? Don't force a trade when there's low volume. And I'm going to go to the charts and I'm going to show all of these things, but these are my rules, okay? So I don't like trading when the candles are real small, okay? Because what's going to happen is the time that it takes for a stock to make a move is going to be is going to be it's going to take longer and it could eat away at your premium, right? And it can make your contracts decay. So when I'm scalp trading, I'm looking at moves. I'm not looking at small little red and green candles because it ain't gonna do much for you, right? That's why you like have your swing trades, that are gonna be doing what they're doing, and then your day trading, your day trading moves. Okay, so if you focus on momentum trading, you'll end up making a lot more money, and then you won't be in plays for a long time. All right. Next thing, don't go against the trend. All right. This is a certified way to be put in a blender and become a smoothie. All right. Do not go against the trend. If you clearly see things are going up, stop getting inputs, right? Because it might pull back slightly and then go right back to the upside. And then you're gonna be mad because you're down $600, $700, $800. Ask me why. I know this. I've been there before. All right. Do not trade against the trend. All right. The next thing, do not enter during consolidation. Do not enter during consolidation. This is one of my rules. All right. It's easy to be like, okay, and this goes back to trying to predict things. Oh, it's in a bull flag. It's just consolidating right now. I'm gonna get in while it's in the bull flag, and then it's gonna go up, right? And then the bull flag reverses, it becomes invalidated, and now you down, right? Or you in the play, you get in at the beginning because you think it's gonna go up, it doesn't, and then you stay in the play for a long time. You're irresponsible with the management of your capital, and then 2 hours later, it goes up a little bit, and you think you was gonna make $300, and you only end up making 70 because the contract has decayed. All right. Please do not enter in a trade during consolidation. Be patient and wait for the move to actually be made, and wait for the stock to prove itself. All right. So that's another thing. Don't enter in the consolidation. Also, make sure a stock proves itself. This goes back to confirmation. All right. Wait for confirmation candles. All right. Make sure your entry is on point. All right. I wait for the candle to close, and then I see what the new candle does. Today, I did not take any day trades. Right. And I'm proud of that because I did not get put in the blender. I did not become a smoothie. All right. Honor your stop loss is another one of my rules. All right. Honor your stop loss. If you say my stop loss is 10%, then get out at 10%. If you say your stop loss is 20%, get out at 20%. All right. If you say if the stock does this and it doesn't close above here, then you need to honor that. And if you don't know what your stop loss is, then you need to get back in the lab and figure out what your stop loss is, right? If you do not know your stop loss, if you do not honor your stop loss, what's going to happen? You're going to become a what? A smoothie, all right? Do not become a smoothie. Don't get blended in this market because you don't know how to honor a stop loss and admit you was wrong, okay? That's your ego. Another rule that I have with myself is don't trade wide spreads. All right. There are stocks that make great moves, but they have wide spreads. I'm not day trading those stocks. It's just one of my rules. I'll swing trade it, but I'm not going to day trade, scalp trade a stock with big, fat, wide spreads. I'm not doing it. All right. I remember when I was in beginning trading, I didn't know this. I remember I traded Carvana one time. I got in a call, it was going up. I entered in, I'm down 290. I'm like, whoa, what you mean? Didn't even know, didn't even understand, right? I was a smoothie the second I got put in the blender. It didn't even get to turn on. I was already a smoothie before, right? So you got to understand the game. I do not day trade and scalp trade wide spreads, all right? So those are my rules, all right? So you got rules, and then you got confluences, all right? Now, what are confluences? Confluences are what are the supporting things and facts to the thesis of why are you going to get into a trade, right? So here's some things that I'm looking at when we're looking at confluences for a stop. First thing, what's my risk to reward, okay? What is my risk to reward? Based on the direction that I want to go, the stock to go, okay? Based on that, what is my risk to reward, okay? Is it more likely if it comes down, right? And this goes back to your entry. If you get in close to support, it's not going to come down a whole bunch, right? But if you get in further away from support, your risk to reward is smaller, okay? So I'm always looking at my risk to my reward. That's why I love rejections, right? So what's my risk to reward? That's my first confluence that I'm looking at. Another confluence that could be very powerful is the matching time frames. If you get in a trade and you wait on the 15 minute, but the 15 minute also matches up with the 30 minute because it's like 8 o'clock, 9 o'clock, 8:30, 9:30, right? That could mean that that move is actually going to really, really be powerful because it's on the 15 and the 30 minute, right? Or the hour time frame. It doesn't matter. But if you have multiple time frames that match up and it's the same move, then you know you got a banger coming, all right? So, and all these confluences help you to not become what? A smoothie, okay? The next thing, overbought and oversold, right? Where is it at on the RSI? Do I use the RSI to dictate my entry? No, but I use the RSI to help me with a confluence. So if I see, I'm not gonna get in a call on a stock when it's at 75 on the RSI. I'm not doing it, right? Because it could reject at any second, any moment. So I don't get in puts when it's over, I don't get in calls when it's overbought. I don't get in puts when it's oversold, right? When it's already at that low level and it's oversold and you see a whole bunch of red, I'm not getting the puts because my risk to reward is done. It already got to the target, right? So most likely, it's more likely for it to reverse and go to the upside before it comes back down, okay? If the RSI is at like 45 or it's in the middle and we looking at puts or calls, okay, right? We got some room to run. So that's another confluence. Another one is, what is the strategy that I'm trading? Is it a fair value gap? Is it a reversal? Is it a chart pattern? Do I see a head and shoulders? Do I see a bull flag? Do I see a bear flag, right? And then I'm gonna match that chart pattern or that strategy with the actual levels and all of that other stuff as well, right? The next thing I want to look at with my confluences is where are my EMAs in relevance to my entry and my exit? Are the EMAs signaling an uptrend, right? If I'm getting into calls, or if I'm getting into calls off of a reversal, right? Is it an uptrend or where are they at? And then I need to know my exit, right? If I'm getting in on a reversal, either from the upside or the downside, I might be, coming to get out at the first 9 EMA, right? So, or the VWAP, it just depends. But where are the EMAs at in relevance to the stock price and where it's trading at? Okay, so in the next one, and the last confluence is where's the VWAP at? If the VWAP is, near the EMAs and the stock is coming down and it's below the VWAP, I'm not getting in a call, right? If the stock is coming down to the VWAP and I'm expecting it to bounce to go up to the upside, okay, that makes a little bit more sense, right? So you want to know where the VWAP is at as well, okay? So what we're going to do is, let's just go into the charts, and I'm gonna show y'all a couple things from today's market and why I didn't really take any trades. Okay, so this is today. The market is still open as we see, right? So I'm in this Robinhood swing right here. We got in on Thursday, so we already up in that. We up like 50% on that one. That's a banger. But yeah. So let's look at this. So let's say Robinhood, okay? So today, it went to the upside. This whole day, it was trading above this level, above 70 on the RSI. I'm not taking calls right here, because even though it went up a little bit more, once it broke this level right here, it's already oversold on the RSI, so I needed to pull back first. This is what I'm talking about when I say wait for the pullback before you get to a call, right? I use my Bollinger Band sometimes, but the Bollinger Bands, if we turn on the Bollinger Bands, right? Right here, it was riding the outside of the Bollinger Bands, right? So I wasn't going to get in a call because I knew that it could come down here pretty soon, and that is what it ended up doing, right? Let's look at ExxonMobil. Right, I almost got in a call on ExxonMobil, right? I almost got in a call on ExxonMobil right here, right? So look at this right here. This is what I mean. It on a 15-minute time frame, it came up, it closed under my resistance level right here, right? Under my resistance level. So I did not enter in. And then it ended up going up. I didn't want to chase it, right? Now I could have got in right here, but I didn't want to because it didn't break above this level. So I was not comfortable doing that. And it ended up going up. But look at how much it went up. It only went up from 116.47 to 116.84. That's only 40 cents, right? Like I'm looking for different moves rather than just that right there. You know what I'm saying? Like 80 cents to $1 is a little bit better for me, right? And then it was already up here close to the RSI. So I was like, man, I ain't really gonna mess with it, right? And then, so right here, it was above the VWAP, so that was a good one. But it was just already up here, and I was like, man, I'm not trusting it because all the stocks today, if you look at all the stocks today, look at Carvana. It's been overbought all day, right? It's been overbought all day. Look at Apple. Apple looks like a barcode, right? Apple just been consolidating all day. It ain't really done nothing. 218 is the lowest it went, right? But it's just been going up and down. It ain't really been doing anything, right? HIMS, right? It came up. It's been consistently going up, but like even this pullback, this ain't really too much of anything. It looks like the stock market is green, but there were so many traps today, right? There were so many traps today. So it's like you wanna make sure, like look at block right here, okay? Look at block right here. Boom, 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 right? Like this is in the middle of a range right here. This is a support level that I have charted out, but it's basically in a small range, right? Of what? From 62.98 to 62.16. That's less than $1 range right there, right? Apple has been going up between $1 to $2.50, right? Shopify, it's been up here. It came up, and then look, it's just been in this range it's been going from 109.54 to 110.54. Like this is not a type of day that I want to trade because it's a lot of traps, right? You think it's going to keep going up and then it'll stutter and then it'll go down a little bit and then you're down a little bit and then you think you want to get out and then it goes up a little bit and then it's just too many games being played right now, right? Too many games being played right now. And all day, look at this. I didn't get in Shopify. It was overbought all day, right? Even when it was down here, it was overbought. And so when I'm looking at the risk to reward, I'm like, it could reverse and I don't want to take that risk. You get what I'm saying? All day. Look at Meta, right? Came up. It looks like it's coming down, but it's not really. Because when it's real time and you're looking at this real time, it don't be making sense, right? This closed below the 21 EMA and then it went right back up, right? I need to see convincing closures, right? I need to see momentum. These little small candles, I'm not trading that right there. That's not convincing enough to me. I need to see a rejection off of a level and then boom, I need to see pressure coming so that I know that stock is going to move fast and I'm going to be able to get in, I'm going to be able to get out. All right. So that's what I'm looking at when I'm looking at confluences. And those are some of my rules. All right. When you understand your rules and you know your rules, you will not be a victim of the blender. All right. I don't want you guys becoming smoothies because you ain't got patience and you ain't got discipline. All right. So let's make sure we're locking in. We're tightening up our game. All right. And we're being disciplined and strategic and patient in our trading. It's okay if you don't take a trade today. That's what maturity is. That's what it is being a professional, being an elite performer. That's what it's about. Know when to not take a trade and know when to go hard. The market has been green today so far does not mean that everything is just all green. That's not what it means, right? It's a lot of traps that was set today and a lot of people got faked out in both directions and they're mad right now. And they're a smoothie and they're mad, all right? So tomorrow, let's tighten up, let's get better, practice that patience, practice that discipline, all right? And make sure you are not a victim of the blender because I don't want you to become a smoothie, all right? So I hope that helped with you guys today. Always remember, get out of your head and go get into this world because your head is a dangerous place to live, all right? And also remember, the more you study, the less you worry. I'm going to see you guys on the next video. Peace.